Boom! What's going on, Investomaniacs? Your boy, a Knight Rider here, and today we've got three subscriber questions on some stocks. Up first, we've got Hang Yang. Sorry, I know I'm slaughtering it. I just don't know how to say it. I tried. He wants to know about Skyworks. He really wants to buy a semi, and he says he likes the balance sheet, the PE, but he wants to know if the company has a moat. A moat is a very specific word, right? Moat kind of means that another company cannot come in and do like the same thing and take away market share or completely take over altogether. I don't see a moat around Skyworks, but all companies don't necessarily have to have a moat, right? So Skyworks makes non-bleeding edge chips, right? Kind of more like a commodity-based chip. There's nothing moat-ish about that, right? They're making commodity chips. They're just a good operator. It would be no different than like the rails, right? It's like one rail company versus, and I know it's like a train, right? So like, what's the difference between one train company and another train company? Or one like Delta versus, I know you're in China. I don't know exactly how much you know about America, but like the planes, right? Like, so the different air carriers, like what's the difference between the different air carriers in your country? Or generic drug manufacturers. Like they're kind of doing commodity-based things, but you don't always have to have a moat to be a good and very successful business. You just need to be a good operator. So I think Skyworks is a good operator, and I think they can be successful in this space, and they have been very successful in this space. I think they'll continue to be successful in this space. Additionally, this is a space where I believe multiple companies can exist and thrive together, just like there can be multiple rail companies and there can be multiple generic drug manufacturer companies and kind of plane carrier companies. So no, I don't think there's a moat, but I wouldn't let that dissuade you from purchasing the stock. I also don't have a problem with the kind of the financials of the company. Having said that, whether or not I would recommend it would be based upon what happens with the trade war. So when Trump put on the ban on selling to Huawei, I didn't like the stock anymore. When Trump restricted that ban and said that commodity type chips can be sold to Huawei, which would include Skyworks, then I liked Skyworks again. And if Trump put that restriction back on Huawei, then I wouldn't like the company any longer. And I try to avoid companies when my opinion of the stock is based upon macros and not the fundamentals. It's difficult enough to find stocks that we like, and I just think it makes it unnecessarily complicated when we then have to factor in what our national governments are going to do. Having said that, it's only a 13 PE, so it is a cheap stock. Now, we can probably expect a little bit more, dip in our earnings. But having said that, I think we're low enough in the cycle where even if maybe we're not at the absolute bottom, I think we're close enough to the bottom where I don't think it's a mistake to buy the semis right now. And you're getting a nice little 1.8%, 1.89% yield. So that's beautiful. Revenue has kind of, the overall company really made a turn around 2015 where it slowed its growth overall and started kind of buying back shares and stuff. So just understand it's going to be a slower growing company, but if that's what you're looking for, just a kind of cheap kind of value type play that still has a little bit of growth left, I think this is a good option. But again, what ultimately happens, I think, is for where the stock is going to go is largely controlled by the trade war. And then up next, we have RingCentral. Ferris wants to know about RingCentral. I think you've got a good picker for growth stocks. I like RingCentral. And I just want to take a moment to appreciate this because I think, a lot of times we just glance by it, but in the past 5 years, we've gone from under $14 to over $122. We're getting like a 9-fold return, or maybe it would be an 8-fold when you take out but you get the point I'm trying to, right? You're getting like a 9x in the stock in 5 years. And that is life-changing money, people. So just good job historically, but where is the stock going in the future? So right now, the market cap is 10.33 billion, and our top line is at 725 million for the trailing 12 months. So we are trading somewhere around like 14-ish x revenues. And we are at negative 3.1% operating margins. We were at negative 2.4% operating margins in 2018. So we are pretty close to being profitable for a software as a service company, which tend to have pretty high margins. This is a very kind of nominal amount of money that they're losing. I think they could, they can just lower their marketing and advertising and kind of slow down their development a little bit. I mean, they could be profitable tomorrow if they wanted to be. So I like investing in these types of companies around this operating margin when they're still not profitable, but they're pretty darn close to it. Also, let's see, shares going from 2016 to current mid 2019, we're only going from 73 to 80 shares. So that's only like a couple percentage points of dilution annually. Not bad at all, particularly for a company growing as quickly as it can, or quickly as it is, because a lot of times high growth companies, they're really diluting their shares, and it kind of defeats the purpose of all that growth because your per share increase just, it all gets diluted away. We are free cash flow positive in this company. We've been free cash flow positive since I think 2016. We've been operating cash flow positive since 2015. So that's a very important kind of mark to be free cash flow positive. So there's not so much need for raising new capital at this point. And our revenue growth is at 34% in last quarter, and in 2018, our 3-year compounding top line growth is 31.5 and then 33. So absolutely beautiful top line growth. Let's take a little bit look at the balance sheet. We have 559 million in cash. So that's a solid amount of cash. It's like 2/3 of their top line. And then we have 372 million in debt, which is not bad. I don't know why I can't. There you go. 372 million in debt, which is, what is that? It's like about like half of their top line. Yeah, it's like roughly a 50% top line. Not bad at all for a company with the growth rate they have, for being like a software as a service type company, which, theoretically, once they slow down, they should be able to have pretty high margins. So not a scary amount of debt, very manageable amount of debt. And by the way, I'd way rather have a company have some debt on their books than have no debt but be diluting their shares instead. Long term, you're going to lose a lot more value with them diluting their shares compared to taking on debt. And they have an accumulated deficit of 242 million, which is, again, not bad at all for where they are with their top line and still their current growth rate, which is still quite high. So from a financial standpoint, I absolutely love RingCentral. I would rate it a buy. I would encourage you to buy it if this is a space you like. The only caveat I will put on there is if the only reason that you want to invest in this company is because the financials look good, I would not recommend doing it, because I personally don't like this space. What do I mean by that? This is a cloud phone, video conferencing, team messaging, and contact center. In my opinion, this is more of a commodity based service that they are providing to businesses, and I see nothing proprietary about this type of a service. It's the same reason I don't like Slack. It's the same reason I don't like Dropbox. Yes, the companies are doing well right now and they're growing right now, but I don't see any, as we would say, moat, as we were talking about early. This is a type of a space where I do think it can be kind of more of a winner take all type situation. And I think that at minimum, their margins can become depressed. And it just, things move really fast in the world of bits, a lot more so than in the physical world. There's not a whole lot of new startups trying to take over the rail companies. There's not a lot of new startups trying to be the next Delta or United Airways. There are a lot of very, very smart people trying to do these exact types of things. So I try to look for software companies where I personally feel there's more of a sustained advantage, that where they have some sort of like something proprietary, or some sort of a kind of a platform where third-party developers start developing on them, and that platform kind of grows a lot, or a network effect where kind of like a Facebook, where it becomes more powerful as it grows. So if I'm going to go in the software as a service space, I try to lean towards those directions. Here's my portfolio for full disclosure, and you can see I do lean in those towards those types of directions, kind of with like my Etsy and my Roku and my Shopify. I mean, these are all kind of like platform-based type things, and kind of companies where as they get larger, they get more powerful. So again, that's my personal preference. So again, all of that was just to say, if the only reason you were looking into RingCentral was because you liked the numbers, I would just take a second look and make sure you actually like the business itself. But I do love the numbers. And Garrett Shook, because there ain't no such thing as halfway crook, says, how do you feel about B2Gold? I bought at $3.01 and it's up to $3.08 in a day. Advice. Yes, Mr. Garrett, first of all, congratulations on your 7 cents increase. However, I would try to not focus so much on what happens to your stock kind of in the days period, unless you are a day trader. If you're a day trader, then I'm not super helpful to you, because I'm not a day trader. I'm more of an investor. So I'm looking for companies which are going to do better over a period of years. And many people would say that that's where most successful people who are operating in the stock market are. They are doing more investing type stuff, unless you're like a quantitative hedge fund, which I would imagine you're not if you're asking me this question. So unless they reported earnings that day or put out some press release that day of significance, then it going from $1 or $3.01 to $3.08, it's just noise. It doesn't really mean anything. Whether it goes up or down is completely irrelevant. Valuation changes, but the reason for it going up or down in any given day is basically just random. It's complete chance. It's a bunch of technical traders and momentum traders, and just, you know, people just trying to kind of like look for patterns and stuff like this, that many would say don't actually mean anything when averaged out. So yeah, that's the first thing I would say, is don't pay so much attention to that initial move. Now on to what do I actually think about B2Gold. So let's go ahead and take a look at that. So B2Gold is a gold mining company, and it's not a space I'm really a fan of, because the financials today can be misleading. So you might look at the financials today and say, oh, it's like revenue's growing and they're not profitable, but say they were profitable. It's like, oh, they're making money and profits are going up and operating margins are good and all this and that. But you have to remember, there's so much luck involved in gold mining, and the financials in some cases can be misleading because they can look good and times can be good for now, but the gold can stop coming out one random day and all of a sudden everything falls apart. So it's different than the financials of, say, Facebook, right? You look at Facebook, you can see what it's doing today, you can kind of see its history, and you can make projections out with moderate accuracy. I mean, obviously we're dealing with inaccurate information and we're making guesses and estimates, but you have more information relative to, you're looking at the financials of gold company, but there's so much luck involved because you literally do not know what is in the rock that you haven't mined yet. So I would say this is an area which is a little too complicated for most investors to be in. If you are of such a skilled level in your ability to understand where gold is, then you should probably be in the actual gold mining business, not just buying stocks in gold mining businesses. So yeah, I would go ahead and avoid the gold miners in general. If you're interested in this, like I see, it's a very small number type company. If I remember correctly, I think the where you made the comment was on another company. I think it was like Neo or something, where it was like another really like small number. It was like another like $3 stock or something like that. Try to not focus on stocks that just have a low kind of number point, but focus more on like a low PE ratio. So how much it's earning relative to the price of the stock, because that's a more accurate indicator of how cheap or expensive the stock really is. And then secondarily, if you want to make a whole bunch of money, I imagine you're going to the gold mining companies because you think it's an area where you can get a little lucky and find a company that's going to strike gold literally and make you a whole bunch of money. If that's what your goal is, then I would focus more on small biopharmaceutical companies. It is, again, a very risky area to invest in, but it's also where you can get some of the best possible profits if you are right. So if your goal is to make as much money in as small of a period as possible, I would go with small biopharmaceutical companies. I don't personally invest in small biopharmaceutical companies because it's too risky for my taste, and I'm also not in a financial situation where I have to make that much money. I have a current bankroll where I can make 20%, 30% a year, and I'll be very happy with that. But if you're in a financial situation where you need to make more, then if you want to take more risk, that's an area you could go into. Having said that, also just understand you can literally lose all your money playing with small biopharmaceutical companies. It's a very risky area to invest in. So if you can increase your the base amount that you're working with, that will probably help out quite a bit as well. Anyways, guys, I hope you enjoyed. I appreciate the likes, comments, and subscribes. If there's anything else you want me to check out for you, let me know. Have a great day.